Started with $1 and a dream. This one for all the people that said I couldn't do it. You know the best feeling in the world is doing what the fuck you wanna do, living the way you wanna live. You gotta have dedication, determination, and discipline.
What's up, you guys? It's James here, and I want to welcome you to today's video. We are going to look at a very simple yet important concept in trading. So this information is very rare, so make sure you watch this video to the end, and I can assure you that you are going to learn something very important. This video is going to be very eye-opening, so make sure you watch the video to the end. So what we are doing today is called the daily price range. Now, why are we doing the daily price range? The daily price range is actually going to help you to anticipate. So as you know, Forex is all about prediction. Forex is all about making anticipation. So this very simple concept is going to enable you to predict certain moves that occur in the market at some point. So let's get straight into it. So I don't know if you remember this, but when we started our trading from the beginning, we did talk about the anatomy of a candle. We mentioned how the candle forms. So let's look at how the candle forms. So if you get a candle like this, we say that in order for us to get a bullish candle, the closing price always has to be above the opening price. So looking at this candle, we can see that this candle is a bullish candle, just because we have the opening here and then we have the closing here. So this candle is a bullish candle. If the opening price had been at this place and the closing price had been at this place, then we can say that this candle is a bearish candle. So we have the O to be the opening price, we have the L to be the low of the candle, we have the H to be the high of the candle, then we have the C to be the close price. So this is actually, I'm using opening price and I'm using low of the day and the high of the day because I'm going to teach you in this video how the daily candle is formed. So let's get into it. So this is a bullish day. The bullish day, we have the closing price above the opening price. So we get the opening price at this point. This is where the price actually opens. Then it will move down a little bit to form the low of the day. It will move up to form the high of the day. Then it will move over to this place to close. Same way for a bearish day too. We get the opening price at this point. Then it will move up to form the high of the day. Move down to this point to form the low of the day, and then it finally closes at this point. So this is a type of chart. This is how you can actually get this chart. So you have to come over to this place. When you go to the chart style, you can see that we have the candles. So this is the normal candle that we use for making analysis. But if you actually want to change it into the bars, you just come over to this place, bar style, then you choose the bars, just like you have here. So let's look at this. So this one would be a bearish candle. We have the opening price. Always the opening price is to the left. So let's look at this one. The opening price is the left, and then the opening price is also at the left here. So always the opening price is left whilst the closing price is right. So looking at this chart, you can see that this candle is a bearish candle. You have the opening price here, it moves up a little bit, come here to form the low of the day, and then it finally forms a closing price. So this is actually the daily candle. So we are going to look at how the daily candle forms, and bear in mind that I don't use any indicator. The indicator I use, it only helps me to know the Asia session, right, which is a concept I'm going to show you right after this daily price range. So the only thing that you need to know using this concept is you need just these parameters, which is the closing price, the opening price, the low of the day, and the high of the day. That's the only thing that you need to know in order to start making these anticipations. So that's it. So let's actually get into this. So this is how, so we actually call this one the power of three. It's called the ICT power of three. We call it the ICT because it was Michael J. Huddleston, who is the founder of ICT, who actually brought about this whole concept. Yeah, so this is the Asia session range. These are the daily candle actually forms. During the Asia session, you see the market consolidating. During the London session will form the high of the day, and then it will move up, to move down, and then to come and finally close at this point. So that's how come they're actually forming these candles in this way. Yeah. So the daily range is defined by three important sessions. Please make sure you take some notes. Make sure you come back and watch this video again. Don't watch this video just once, because you are not going to get the concept. But I guarantee you that after watching it for the second or the third time, it's going to finally make sense to you. Yeah. So the daily range is characterized by three important sessions. I've been talking about this a lot. We have the Asia session, and then we have the London session, and then we have the New York session. We have other sessions too, like the Sydney, the Tokyo sessions and all that. But these are the most important ones. These are the most important three ones. So the daily candle is generally characterized by these three sessions. You have the Asia session. So the Asia session is characterized by being a consolidation due to the lack of liquidity in the market. And then the Asia session actually starts from 12 a.m. to 7 a.m. It actually ends at 6 a.m. Yeah, so I don't want you to just listen to what I'm saying blindly. I want you to go on your chat right after watching this video. I want you to go on your chat. Don't be a lazy asshole. I want you to go right onto your chat and then see these things for yourself. What you are going to notice is that during the Asia session, the market consolidates a lot. The Asia session range is always noted for consolidation. So when you look at the chart, go onto your chart and see this for yourself. So just by looking at this bit of price action, this part is called the Asia session. So just like you can see, this red line here is demarcating the Asia session. So just like you can see here, it is ranging as in the market is just moving sideways. You are not going to see the exact place where the market is trying to go. Right, this point to same way the market was just consolidating at this point. If you compare this part, this is actually the London session. If you compare this part to this part, you see that at this point the market is just moving sideways. At this point the market is clearly moving down. Same way when you look at this point too, the market is ranging. Look at this place, the market is clearly trending to the downside. So that is the more reason why I've been asking you that you should know the sessions that you should be trading. If you want to be trading the Asia session, fine, you can do that. But just know that the Asia session is usually consolidating, especially for the US pairs and the GBP pairs. Why is it happening so? Because I've been saying that we are always trading the footprints of the institutions. During the Asia sessions, the institutions, they are asleep, they've closed. Even in Ghana here, the banks close I think around 4 p.m. and all those time. So during that period, you see that the market will just be moving sideways, just because the smart money or the BFI is simply banks and financial institutions. They are asleep and they are not active in the market. So that's the more reason why you see the markets consolidating at that time. Yeah, so that's it. So always, especially if you want to be doing intraday setups, if you want to be looking for intraday setups simply means day trading. These are the type of moves that you want to be catching. You don't want to be in this type of market. You want to be catching the trending market or the volatile market. You want to catch the pair when it is very volatile. Yeah. So just like I've been saying, that go on your chat, don't just listen to me, go on your chat and see it for yourself. The next session that we can also look at is the London session. So the London session is also characterized by making the low of the day or high of the day. It can be used to take trades to the opposite side of the true direction of the day. Yeah. And then the London session also starts from 7 a.m. and then it ends at 4 p.m. But I'm saying 7 a.m. to 4 p.m. because that is the whole for the landing session. But that does not mean that you have to be trading from 7 a.m. to 4 p.m. just because you are trading the landing session, right? So the first 2 to 3 hours of the market, you are going to see certain patterns that has been happening over and over again, so that you can start to anticipate those actions, those price actions. Yeah. So that's it. So the landing session, just like I said, will form the high of the day or the low of the day. So if you're able to anticipate what the daily candle is going to be, let's say if you're able to anticipate that the daily candle is going to be bullish, or the day is going to be bullish, or the day is going to be bearish, then you can start to form our anticipation. Generally, if the daily candle is going to be a bullish, or if the day is going to be a buying opportunities, or if the day is going to be moving up, what will happen is that the landing session will usually form the low of the day. The landing session will form the low of the day. If it is going to be a bearish market, the high of the day will form during the landing session. So this is actually the 15 minutes time frame. So just like you can see here, this is actually the Asia session. This is where the Asia session forms. So looking at this candle is a bearish candle because you have the opening here and then you have the closing price here. So this is actually a bearish candle. So this one single thing is a representation of the daily candle. See that the Asia session was ranging. During the landing session, we formed the high of the day, which is at this point. This is the highest point the market got to, and it's formed during the landing session. And then it will form the low of the day, and then it will finally move up a little bit and close at this point. So this is called the classical power of 3. We'll talk about it, we'll talk more about it, we'll go in depth into it. Yeah, but that's how it is. This day too is also a bearish day. See how the Asia session was ranging. During the landing session formed the high of the day, and then it moved down, and then it finally closed at this point. So guys, this is a very repeatable pattern. This is how you can start making anticipation in the market. Just like I told you, this information is rare. You are not going to find it anywhere. So make sure you take notes, you watch it and watch it once again in order to understand it clearly. So that's it for the landing session. And then the New York session. So the fact that I'm saying that the landing session is going to form the low or the high of the day doesn't mean it's always going to happen. That's not the case. Sometimes the low of the day may be formed in the New York session, or the low of the day can be formed in the sometimes even in the Asia session, but that is rare. But majority of the times, most of the times, the low of the day or the high of the day is going to form during the landing session, respectively, whether the day is going to be bullish or the day is going to be bearish. I hope this makes sense to you. And then the New York session is characterized by being a reversal after the landing session made the low or the high of the day. Sometimes the New York session can make the low or the high of the day. So just like I said. And then the New York session also starts from 1 p.m. and it ends at 8 p.m. But that doesn't mean that you should be in the market from 1 to 8. The first 2 to 3 hours of the market is the volatile. So that's the part that you want to be in the market. So for that one, what this means is that it is going to form the reversal. So let's say if the landing session, the New York session forms a consolidating, the landing session comes over to this place, and then this one forms the low of the day. Let's say if the landing session is trending down during the New York session, sometimes what will happen is that the market will just reverse or to start moving back. So that's what we mean by reversal. Anytime the New York session, it's not anytime, but most of the times when the New York session is setting, the market will usually tend to reverse. So guys, so just by having this piece of information, it can help you to anticipate what is going to happen in the market. So you know that landing is going to form the low of the day or high of the day, day is bullish or bearish. So during that time, you can start anticipating that this is going to happen, or you can use it as an added confluence. This is going to also help us to come up with a very nice strategy, a very simple, it's the most simplest strategy that I've ever used. Very simple strategy. We'll do it after this lesson. Yeah, so let's move on. Let's look at some examples. So these lines are the Asia sessions. These gold lines are the Asia session. See that it's ranging, it's ranging, it's ranging, it's ranging. So this is a live price action. See that most of the time it is going to range. See the landing session. This is usually what volatile, or it is moving sharply. See this part as compared to this part. See this part as compared to this part. So this is how you can actually build anticipation to the forex market. Yeah, so I hope this makes sense to you. So let's look at an example of everything that I just said. So this is the Asia session, which is the golden part. During the Asia session, you see that it is basically consolidating. So this is actually a bearish day, or this is a day where the market was moving down. This is the 50 minutes time frame. So the market was moving down for this particular day. You see that during the Asia session, the market was consolidating and it formed the high of the day during the landing session. So this one will be around 9 or 10. Formed the high of the day before it started moving down. Yeah, so that's it. So let's look at a graphical representation of it. So this is also going to help us to introduce a new concept, which is also called A stands for accumulation, M stands for manipulation, and D stands for distribution. So this is just like, so this one here is just like a representation of this one. So here's a New York session. Here's a New York session. You see that the New York session is basically consolidating. So both buyers and sellers they are all happy because there's a fair amount of buyers and sellers in the market. And remember, I've been saying, we have looked at liquidity in the past. We say that liquidity is how the banks they manipulate the market. So when we see something like this, people will be buying from this point, people will be selling from this point, and then we know that liquidity rests above equal highs and equal lows. This is equal highs because we have a support and resistance at this point. So people have their stop orders at this point. People also have their pending orders at this point. So when the price actually gets to this place, those who are buying at this point, their stop loss are going to be taken out. Same way for those who are also selling at this point. For the breakout too, they are going to be kicked out just because the day was basically going to be bullish. Yeah, so this is basically the bar candle, everything just like the bar candle. So during the Asia session, the market will be consolidating. The consolidating here, the institutions, they know what they are going to, exactly what they are going to do. So when the market is consolidating like this, it's a build-up of liquidity, because for those who are looking for the breakouts, they are going to be selling at this point. Once the price taps in or take them out, and then they will take the opposite side of the direction. So just like the daily buy here, we have the opening price. So the opening price of the daily candle is always going to be the New York and the Asia session. It starts from 12. The day also starts from 12 a.m. So the daily candle starts from the Asia session. During the Asia session, it will consolidate. So here is it. And then after the consolidation, now we have liquidity at this point. So you see that the price will actually move down to grab the liquidity at this point, and then it will form the low of the day. So when it gets to this place, it did Ethereum. When it actually gets to this place, then it will form the low of the day before it reverses. So just like this one, this is a very repeatable pattern. This is something that happens over and over again. I don't expect you to believe me. Just go on your chart and then just look at it. Don't be a lazy asshole. So it opens like this, move up. The moving here, the M simply is manipulation. So we have the AMD. So A stands for accumulation of orders or accumulation of liquidity. They are just accumulating the orders here in order to what? Grab the liquidity. And then the manipulation is basically to trap or trick the retail traders. So if you're actually trading support and resistance and you see a breakout like this, you're actually going to think that the market is going to be selling for the day. Make sure you understand your support and resistance video. You are actually going to think that the market is going to sell for the day. But what they are doing is that they are just trapping you, or they are just tricking you in order to take the opposite side of your trades. And then distribution is when they actually move the price to their desired direction, or where exactly they wanted to move the price to. Right? Yeah. So I hope this makes sense to you. So accumulation is the build up of the liquidity. Manipulation is when they actually trick you and trick you to grab your liquidity, and then distribution is when they finally move the price to their desired direction. So this is exactly how the daily candle forms. You see the opening price, the manipulation, and the distribution, and then the closing price. So this is for the bullish model. Yeah, so here is it: accumulation, manipulation, and then distribution. So this is exactly how the market works, guys. This is the good news. So let's look at how the daily candle forms at this point. So we have this place to be the Asia session. During the Asia session, you see that the market is clearly consolidating. The London session is this point. The market will form the low of the day during the London session. And then, so looking at this one, you see that this time is actually 9:15 a.m. So let's say this one will be like something like 10 a.m. It's the London session. This one too is we have 4 here, 2 here. So you see that this is the Asia session, which is also causing the accumulation of the property or the build-up of the liquidity. And then the London session will form the low of the day before the price actually takes on. Yeah, so let's look at some more examples. So just by looking at this one, you see that you've seen this thing happening over and over again. So just go on the chart. You can use the 15 minutes will make it very simple for you. Now if you are using the laptop, you can press Ctrl+Y. When you press the Ctrl+Y, the period separator will actually come, so that will help you to easily identify the day. So here's the Asia session. Asia session, as usual, will be consolidating. Here's the London session. The London session will form the high of the day. So the high of the day will form during the London session, and then the New York session. So we have the accumulation, manipulation, and then finally the distribution. So it opens at this point, move up a bit, come open at this point. So compare that one to the bar chart that I show you, or the line that I show you. See that here's the opening price, move up a bit to form the high of the day, and then to move down to form the low of the day, and then it will finally close at this point. So that's exactly how the daily candle forms. Here is the Asia session. Asia session, as usual, is consolidating. It will move down to form the low of the day, and then it will form the high of the day, and then it will finally close at this point.
Yes, it's true.
So that's pretty much it, as simple as that. So guys, yeah, as simple as that. So we have accumulation, manipulation, distribution, and then accumulation, manipulation, distribution, and then closing price. So let's look at some more examples. We have this one to be the Asia session. After the Asia session, then the market just moved out. So see that this actually started from around 12 a.m. And then this is the London session. The London session forms the low of the day at 9 a.m. exactly 9 a.m. then it's finally moved down. And then I told you that the New York session is noted for reversals. So during the New York session, you see that the market started moving down, moving to the opposite direction of what the New York session was doing. So that's it. Around this place will be 1 p.m. Go on your chart. You don't have to listen to me. Go on your chart and see it for yourself. The landing session will form the low of the day, and then yeah. So that's pretty much it. So let's look at this one too. This part is the Asia session. So this one will be from 12 a.m. See that it is not trending like this one. From the Asia session will form the consolidating of the ranging market, and it doesn't mean that the Asia session is always going to form a consolidation market. It's not. That's not always the case. Sometimes the Asia session can be trending, but this is what will usually happen. See, the landing session is formed. The high of the day is formed during the landing session before the market actually reverses. Right. So here's it. Opening price, high of the day, low of the day, and then the closing price. So this is basically how the daily candle forms. So if you're able to do your analysis on the high time frame and then you come into a conclusion that this is what the daily candle is going to be, then you can start to build up this anticipation. Yeah. So please, I don't expect you to listen to me. Go on your chat, go and look at it for yourself and see if what I'm saying is true or not. Yeah. So that's it. So accumulation. So this is a few notes that I made just for you. The accumulation of positions generally occurs during the Asia session. Accumulation will usually occur during the Asia session. The accumulation is characterized by being a consolidation market, which is the Asia session. But it may not be the Asia session. Yeah, and the manipulation occurs at the opening of the landing session. Sometimes it can be the New York session, but most of the times it's going to be the landing session. So this manipulation consists of taking the price to the opposite side of the true direction of the rest of the day. So just like we were seeing from the chart, if the day is going to be bullish, the manipulation will actually trap the retail traders. So we are seeing that the Asia session is actually consolidating and then trapping retail traders to come into the market. Then it will finally take the opposite side to grab the liquidity, and then it will finally move to the opposite side. And then we can also look at distribution. Distribution is when the price goes in their intended direction, right? To go in the intended direction where the institutions actually wanted to move the price to. So you as a trader, you don't need to trade at any time you feel like. You have to wait for the big movement. The big movement usually occurs during the landing and the New York session. So you want to be trading around these times. But let's say if you cannot trade the landing or the New York session, then your only option is to trade the Asia session. The Asia session too can be a very great. So if you want to be, so I always advise people that if you want to actually trade the Asia session, then you have to pick up the pairs which functions during the Asia session. So a pair like the Japanese yen, the pairs containing the Japanese yen, those pairs are usually active during the Asia session. So if you can only trade the New York session and the Asia session, then you should be looking at some pairs like that. Yeah. So that's pretty much it. So steps confirms, wait for 7 a.m. New York time, whatever. So yeah. So that's it. So thank you so much for watching this video. I'm going to make the next video for you. The next video I'm going to show you, we are going to talk about the trade management. We have looked at in our next video we are going to look at the daily pip cycle. So the daily pip cycle actually revolves around this one. So that's the reason why I decided to make this video first before I make the daily pip cycle video. So make sure you watch this video. I'll see you in the next video. Thank you for watching this video. Yeah, have a wonderful day, guys. But wait, before that, I think we should look at some chart examples So let's look at the bar candle here. So this is something that always happens. Something that always happens. This is here's the daily candle. So this day was a bearish candle. I told you that the opening price is on the left side and the closing price is on the right side. So here's the opening price. So it opens here, it moves up a bit to trap the retail traders, and then it will finally move down. This is the intended direction, and then it will close here. So this one will usually form during the lambda session. So opening, move up for the manipulation, and then it will come over to this place, and then it will close at this place. So you see that when you go through the chart, you see that this is a repeatable pattern. Open at this point, move up, come down, form the low of the day. This one opens at this point, move up, form the high of the day, move down, and then close at this point. Same way. So this is something that's a repeatable pattern, guys. Just go and look at it for yourself. You have the opening price here, move up to form the high of the day. Let's move over to this place and close. Bam. Yeah, so this is something that happens. So yes, so you can just go to your chart and look at them. If you want to test them for yourself too, just use the 15 minutes time frame. And the 15 minutes time frame will make it very easier for you to see them. But ideally, guys, if you want to be buying, let's say if you want to be selling for the day, just like this point, you want to be selling above the opening price. So looking at this one, here's the opening price. This is actually the opening price. The opening price starts from 12 p.m. So you want to be buying, let's say, above the opening price. Yeah, so that's pretty much it. Thank you for watching this video, and I hope to see you in the next video.